Jason Bond from the Bull Microcap Fund. I wanted to give you our investment thesis for Build-A-Bear Workshop, ticker BBW. Build-A-Bear Workshop runs a make-your-own stuffed animal business and also licenses its brand. The company is transitioning to being primarily a brand monetization business that continues also to be a retailer. I'd also like to give a hat tip to Hidden Insight of Value Investors Club. BBW's licensed store business entails BBW licensing its brand and store concepts to third parties, theme parks, hotels, etc. This business is a franchise model. BBW has zero capital commitment or operating risk, but has the same profit per unit for BBW as running a store themselves. This business is expanding quickly. It's already exceeded 130 units and could more than triple by 2028. Licensing franchising is 7.5% of today's revenues, but 36% of profits. There's plenty of space for U.S. growth, but the international opportunity is even larger. Over half of new third-party stores will be opened internationally, including new partners in Colombia and France. It's also noteworthy that international partners are established toy kid retailers, whereas U.S. partners tend to be hospitality-based operators. As a result, international partners are typically multi-unit operators, whereas some U.S. partners are single-unit operators. There have been zero third-party closures in 21 plus months, even as other licensed franchise retail establishments have been seeing significant store closures. Also, ROI for partners often exceeds 100%. There are several reasons investors have overlooked Build-A-Bear. Investors who invested in BBW at COVID lows have seen 2,500% gains already, and they assume the story is over. Licensed franchise sales add little to total revenue, and so its earnings potential is overlooked. Build-A-Bear investors lost significant money in 2007 and again in 2015, and so they don't look at the stock anymore and therefore don't see the transformation. Because BBW is becoming primarily a licensing company, its earnings quality should continue to improve. Investors are likely to realize this eventually, causing the stock price to move much higher. Because the company produces $50 million in free cash flow per year, it will continue to buy back more stock, recently announcing a new $100 million buyback program, which is 20% of the market cap. Build-A-Bear has trademarks that legally prevent competitors from using a similar build-your-own stuffed animal retail concept. As for other toy entertainment options, customers seem to like BBW for the unique experience of building one's own bear. Also, the company has continued to sell 8 million bears per year for over 25 years, despite the collapse in mall foot traffic. By 2028, third-party stores may exceed 400, producing a net income of $52 million. Meanwhile, retail net income should hit $30 million. So net income for 2028 should be at least $82 million. EBITDA should hit $126.3 million, and cash flow will be roughly $105 million. The current market cap is $526.4 million, while enterprise value is $595.8 million. Here are the metrics achievements based on the 2028 estimates, except for price to book. Enterprise value to EBITDA is 4.72, price to earnings 6.42, price to book 4.09, price to cash flow 5.01, price to sales 0.81. ROE is 42.9%, which is excellent. The Piotrowski F-score is 6, which is decent. Insider ownership is okay at 6.2%. Cash is $25.2 million, while debt is $102.1 million. Total liabilities to total assets is reasonable at 55%, and the dividend yield is 2.1%. Here are the intrinsic value scenarios. Low case, if there's a bear market or a recession, and or if consumer spending declines, and or if there's a decrease in mall traffic, earnings could drop and so could the stock. Mid case, by 2028, Build-A-Bear should have a PE of at least 15. That would mean the stock is worth $88.36, which is over 130% higher than today's $37.82. High case, arguably by 2028, due to its capital light licensing business, the company should have a PE of 20. That would mean the stock is worth $117.82, which is over 210% higher than today's $37.82. Risks. If there is a bear market or a recession, the stock would probably decline. A drop in consumer spending would cause earnings to drop. Mall traffic continuing to decrease would hurt earnings.